What is the objective of the workshop? Okay. There are a number of objectives. The first one is obviously to understand how mutual funds work and the protection that is afforded to the investors in mutual funds through us, SCA, as well as the infrastructure of the mutual fund industry. And hopefully we'll have some time to talk about the different vendors in the mutual fund industry. And should we have some time, we will talk about the other collective investment schemes. Okay? And as we present, you cannot talk about mutual funds and not touch upon many investment concepts. So we'll do some of that. Okay? We cannot talk about mutual funds kind of separate and be removed from many pertinent investment concepts. Okay? Having told you about the objectives of the workshop, what we did not tell you is that there will be a quiz. All right. So I'll give about 6 or 7 minutes to work on this quiz, and then we will go over the key to all the questions. This will give you an idea, kind of test your knowledge about mutual funds. Other participants in prior seminars, they found this very exciting. They like to participate, they like to be challenged. Okay? You may start, yeah? You may start, yeah, please go ahead and start. Okay? So what is a mutual fund? Okay. In the top half of the slide, we have the legal definition. Basically, it's a financial vehicle for the purpose of investment against the issuance of investment units of equal value and rights. Basically here, yeah, you give up your money, and in the old days, you get a piece of paper. But you don't do that anymore. It's all electronic. But what you really are doing, you're committing your money for a period of time. That's what you are. It's a commitment. It is a commitment of resources, money, for a period of time, in anticipation of higher rate of return. And obviously should be careful when you select the fund that is appropriate for your own needs. There's one very crucial concept, and what we touched upon in the mutual fund industry. You should know what net asset value is. Okay? We touched upon this in the quiz. Yeah, market value of the assets minus liabilities divided by the number of shares outstanding. That's very crucial. Okay, for a mutual fund performance. All right. Lastly, I always ask, well, what are some of the other benefits that you could have by investing in mutual funds? Especially mutual funds that are registered with a regulatory authority like ours here. Why are we here? Those of you who work for us. I'm not going to ask Hamid. Keep it stable, okay. So, yeah, what's another way to say that? Regulated. Yeah. Legalized. Well, of course it's legal, yeah.
Product suitability to make things, to make sure these products are suitable for the customer.
Yeah, well, that's good, yeah.
Access to investment schemes.
That's next. Yes, fraud, right? Fraud. اختلاس. We protect investors against اختلاس, fraud. Right? And the other reason is, yeah, here think of, again, if this fund did not exist, you could not have this exposure. You could not have this return risk profile, right? So you are able to take on exposure, right, to investments through funds that you could not otherwise. You agree? Again, I think the banking sector is fairly big, but the telecom sector is limited to 2 companies. But the point, what if you wanted exposure to a sector? Yeah, you go for it with a sector fund that you could not accomplish by investing in one stock. Okay, so these are 2 additional advantages: the protection against fraud, okay, as well as the ability to diversify. That's the one. Again, you take the ability to have exposure to an asset that otherwise you could not. Now, do you have any protection? We already covered that. Yeah, we are here to protect you, the investors. Okay? And those of you who are professionals, we are here to keep an eye on you, right? To make sure that you follow the rules. All right. Who is covered by our regulations? Yeah, the locally produced funds, as well as the foreign funds that are marketed in the UAE. Okay?
How do you regulate foreign funds? We don't have the details, the information.
We don't do. We only approve them.
Approve them.
That's it.
So it's my responsibility to invest or not.
Yeah, that's one of the issues that we're struggling with here, and actually working on and struggling with.
What do you mean by approving?
Okay. There are many banks in the UAE that offer foreign manufactured funds, in the UAE. They cannot sell them to the investors in the UAE unless they file an application with us to market the fund in the UAE, and then we approve that.
And you approve that by cooperation with the countries or the regulators of this fund?
There are some rules. Yeah, they have to be. The fund would have to be licensed and registered with some other regulatory authority in some country, and then we have to. The SCA would have to approve the application for marketing the fund in the UAE.
Depends on some.
There's an application process, basically. Okay. But it's not too extensive, and we are working on that. Let me put it this way. Okay. I have had some interesting ideas, but
Like agreements?
sorry, no. It's just like I made two suggestions. One of them is to set up an insurance fund and ask all those sponsors of those foreign funds to deposit an insurance premium for each fund they market in the UAE, and the premium will vary based upon the size of the assets sold in the UAE. See, that'd be one way to do it, okay? And the other thing that I said, make the sponsors cover any non-market related losses to investors in the UAE as a result of that foreign fund.
But this will increase the cost.
Of course, it will increase the cost. Yes, that's as I said. There's nothing free. Oh yes. But that's me. That's my thoughts, and they may not mean anything. Okay. But there are ways of dealing with it, and I definitely think we're working on this. Okay. Because there's a lot of it. I think I said more than 700 because I wasn't sure. I wouldn't be surprised if it went above 800. Right? Yes, that was a lot. And here's one thing that I want to say. I speak from experience. If somebody approaches you to invest in a fund, be very careful. Because you want to make sure the fund, it's not just a fraud, you want to make sure the fund is suitable for you. Because you receive information about investments where, say, oh, here's the fund, or here's the stock. Just go on, on our website or our even ATM for that matter, and buy whatever shares you want, with no regard to the suitability of that investment to your own needs and your own portfolio. Okay, so be very careful when you select any investment. All right. So we'll continue with that here. Yeah. Do we guarantee performance? Or does anybody guarantee performance? No. Well, performance is not guaranteed. And I heard this is kind of true, but kind of funny and true, and that during the crisis, 2009, 10, 11, investors lost a lot of money, and some of them thought, well, we at SCA should bail them out. We should cover the losses. And obviously my answer would be no. I think it would be, I can't imagine the SEC in the US paying the investors for their losses. They'd be paying a lot of money for many years to come. On the one hand, here's my other cynical thought, is that when these investors were making a lot of money in the stock market, those of you who are working for the Hay'a here, did they send you any of that money? They did not, right? They did, yeah. So why should they want us to bail them out when they lose money? Right, that's another, symmetry. You know, symmetry, right? Symmetry of the gains and losses. All right. Yes, obviously, watch your step. It says, be very careful when you select that fund. There could be losses. There could be losses. There are two types of funds: open-end funds and closed-end funds. Okay. This Nawkhada fund that you have fact sheet for? That's an open fund, open-end fund. How are the transactions handled? With the fund itself. Okay, the number of shares is not fixed. And what would be the transaction price? If you want to invest in or redeem your shares out of this Naqada fund, how do you transact? Based on what? The NAV, the net asset value. The net asset value. As opposed to the closed-end funds. Closed-end funds are listed on exchanges. And the investors trade the shares of that fund among themselves. And the number of shares outstanding is limited. It's fixed. Okay? They trade in secondary markets. Yeah, we already covered that. So here, these are later on, if we have time, I hope we do, we can talk about ETFs. And ETFs, technically speaking, are also mutual funds. The key difference is they trade throughout the day. Okay, we'll talk about those later on. Okay. Company sponsors, fund sponsors. I listed some local fund producers as well as some US and UK fund producers. Okay? Fairly straightforward here. Investment policies. Where do you learn about the investment policies and objectives of the fund? That would be in the prospectus. Okay? It's a legal document that must be filed with a SCA. And the fund or the parent of the fund cannot sell any shares in the fund before the prospectus is approved by us. Okay, it has to be approved by us. Okay? Otherwise it's illegal. Or unless it is a private fund, that's another story altogether. Okay? And the whole idea behind the prospectus is that the investors get the appropriate information or the necessary information for them to make an informed investment decision, for them to be aware of the risks. And hence, transparency is accomplished through, at least in part, through the prospectus. All right. Different mutual fund classifications. Here are a few of the 4 broad different classifications. Money market funds invest in cash instruments, T-bills and the like. Equity funds invest in stocks. And you could have specialized sector funds that invest in either financial services, technology, healthcare, and so forth. And bond funds, specialized in fixed income or security, bonds. And again, within the bond sector, there will be different classifications. You know, they have the government bonds, corporate bonds, okay? And in the US, we have municipal bonds. So here, these are style boxes. What does the style box show? Okay, here. On the vertical axis, that's the easy part. The market capitalization. Large caps, mid caps, and small cap. This is the market value of the companies, classified in 3 different categories. You see sometimes mega caps and micro caps, if you want, the 2 more rows. And the styles, okay, value versus growth. Have you ever heard the term value? Yeah. Value investing versus growth investing. What's the difference between the two? Value stocks would have high or low PEs. They have low PE, right? Low price earnings multiple, and in terms they would have like a high dividend yield. At the opposite extreme, where you'd have the growth stocks. Okay, they would have high PEs, high price earnings multiple, and very low, or most likely, no dividend yield. So here, if you look up the fact sheet for a fund on Morningstar website, okay, I don't know if you've heard of Morningstar or Vanguard. If you want to get data on U.S. assets, basically stocks, bonds, mutual funds, hedge funds, you know, you go to morningstar.com, very good website. Okay. You can see, you can look at this style box, and you say, this fund, I know what this fund invests in. It invests in large cap growth stocks. And if you're not in the business, this may not mean much to you, but this is very, very serious, okay? Because if I was a fund manager claiming that I invest in large cap growth stocks, then my benchmark would have to be large cap growth benchmark. And there are quite a few like that from the S&P 500. There's, I don't know if MSCI is a big one. Okay, there are the FTSE, the Financial Times. There are many index providers that would provide very customized benchmarks. Okay, we call those style boxes. And actually here, this is overly simplified. The real world is not so simple to place funds in very clearly defined boxes. The fund manager, for example, if it was, you know, a large cap growth fund, it will be more like a cloud, right? It will touch upon the blend as well as the mid caps. I mean, you cannot avoid that. All right? And in terms of costs, what are some of the costs? Again, with ندوة fund here. Remember that? Okay. For the honor of investing in the fund, Abu Dhabi Commercial Bank will only charge you 2% to get into the fund. Plus, management will be 1.5%. There are other costs, obviously, that all funds must pay, the administration and the custody. Okay? Here, with this ندوة fund, the redemption is 0%. Is that good?
Yeah.
That's very good. That is very good, actually. That they hit you with a 2% and they don't charge you anything when you get out. Okay? These expenses, what do? They affect the net asset value. They have to be paid out. These costs are incurred. Okay? Actually, the operating costs would have to be subtracted from the net asset value. But what about the subscription fee? Remember what I said 3 minutes ago? They are deducted. You write the check for 10,000 dirhams. Once the check clears, you end up with 9,525 dirhams in the fund. So the subscription fee does not hit the net asset value. But these other expenses are, guess what? These are incurred on a regular basis. The fund must pay for employees, for computers, for databases, for office. Okay? Office space, I should say. Yeah? So all of these affect the net asset value, obviously, and the... this is to calculate the rate of return. Then NAV1 will be the net asset value or the price at the end of the period. NAV0 would be the net asset value at the beginning of the period, or year if you want. Okay? B and C. B and C are two classes of the same fund, meaning the same fund could have different classes of investors. Okay? What's the difference between the two? It is the fees. For B, okay, in both cases you invest $10,000. For B, notice there is no subscription fee, there is no load, okay? And the expense ratio is 1.5%. For C, they say, we're going to charge you 8% to get into the fund. But because you gave us 8% to come to the fund, we will lower the expense ratio to 1%. So what is the consequence of these two different cost arrangements or fee arrangements for the investors, assuming a rate of return of 12%? So now with B, you invest $10,000 and you have $10,000 working for you the rest of your life, or the rest of the term of the investment. But with C, what happens? Remember, you wrote the check for $10,000. the check cleared, how much do you have in the account? Exactly. So $800 is gone. It will never come back. Okay? So what happens later on? Look, here's the value of the fund. 5 years, 10 years, 15 years, assuming a rate of return of 12%. So look at it. 10 years later,
B is better.
B is still better. 15 years later,
B is better.
20 years. Yeah, here again, this is very dramatic. You know, 8% is very high. Usually it's more like this. But there are at least 2 lessons from here, or 3 maybe. It's going to take this poor investor almost 20 years to recover the hit, the 8% hit. 20 years. Is it worth it? Does anybody know here? I know I don't. Do you know that for sure that you're going to be invested in the fund for 20 years?
No.
Do you know that your circumstances will not change in 20 years?
No.
There's a big lesson here, right? So the first lesson, yeah, no load funds are the best funds. Okay? Or maybe if necessary, and if there's some very special fund with nothing like it that you like very much, maybe pay the load. But outside of that, that's very rare, by the way. Outside of that, there's no reason to pay load. I would walk away from any load fund. That's huge. You know, I would not touch this. I mean, that's me. But again,
they're saying here that this is the maximum that might be taken out of your money before.
yeah, but if
Might
you,
be like less, depends on.
but still, he could still charge you that much.
Maybe it
Yeah, it
depends
is.
on the amount.
Yeah.
Yeah,
I guess that's the maximum, but here maybe if you're a client or you have some arrangement, it could be less than that. But in principle, they're telling you it could be 5%. Maybe if you invest $1 million as opposed to $100,000, it could be maybe 4% or 3.5%. You know, I don't know. Maybe call them up and find out and let us know. Okay? So here, this is applicable even for us here in the UAE. What's next? Yeah, here I would cover this and then the latest development, and then we can stop. It's almost 12:15. What are some of the disadvantages or the risks that investors are exposed to when they invest in mutual funds? The first one is market risk. He was telling us earlier today that the market is down 4.5%. You could be the smartest analyst in the world. Today you would have taken a hit. Unless you had vision from God, like this morning, says, sell everything. And that's none of us, right? So it's not going to happen. All of us took a hit today. Yesterday in the US, everybody took a hit when the Dow was down 300 points.
Saudi Arabia yesterday 5%. Saudi Arabia.
Yeah.
Yesterday only.
So whoever was in the market took that market risk and lost a lot of money. That's one. Liquidity. Do you have liquidity risks?
Yes.
Yeah, of course.
How so?
Sometimes you can sell or buy. There is not enough shares in the market.
No, that's not applicable to funds. And now Qadr says, no, sir, you're wrong. You can redeem every day.
Yes, yeah.
Right?
No, not really.
Well, so says this is a legal contract, isn't it?
Yes, but it takes so much time to have your money in the account.
That's another story. But daily I can redeem. In the US, you can redeem daily.
Yeah, you can redeem. What's the problem with this? You can redeem because they have cash.
So there's daily liquidity. There's daily liquidity here.
Yeah.
But I'm telling you here, liquidity is a real problem. This is good information for you. You talk about auditors and accountants and lawyers or what have you, but this is here. Who is this gentleman? He's not my cousin, by the way. And by the way, if I don't read Russian, this is Russian. And this is 1,200. This was a stamp made to celebrate the 1,200th birth anniversary of this gentleman. What's his name? Yeah, but see, this impacts us as investors. This guy. I'll give you the first part of his name. Maybe those of you who know Arabic history and Islamic history would know about this gentleman. His name is sorry. I'll give you a clue. Abu Abdullah Muhammad ibn Musa al-Khwarizmi. Very good. Al-Khwarizmi. I told you he was not my cousin. أنا المحتسب هو الخوارزمي. Okay. Well, what about, this is not history, this is mutual funds. Well, you've heard of high frequency trading, yes. Logarithmic trading. Oh, this is the man. This was a math and algebra genius.
With the foundations.
Exactly.
300 years ago.
Exactly. Yeah. And the Russians, by the way, produce the best mathematicians. They have excellent mathematicians. They have so much respect for him. They actually issued a stamp. I think in 1983, September 6, 1983, when that stamp was actually issued. Okay. So, what did this guy do? This is another image. You have a conversation between the gentleman sitting, says, and the person standing up is the trader. So the trader is asking the quant, says, and what finished algorithm is my favorite quant devising today? So the quant says, trader replacement program. So instead of trader, you can put financial advisor, and guess exact what? That's the robo-advisor. You could input your information, go to the website, your name, your date of birth, marriage, single, your assets, your income, your age, blah, 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 blah. And then it says, wow, how? And the software will tell you what are the appropriate asset classes and what percent to allocate to each one of them. And you may think this, oh, some small quant shops are doing this. No. Vanguard, they manage $3 trillion. And Schwab, $2.4 trillion. That's almost 30–40% of the mutual fund industry in the US.
What about BlackRock? I think they have.
That's 3/4, yes. But I don't know if they do this. Yeah, they are big, no doubt. Probably 3 trillion. It's mostly indexing. Well, so is Vanguard. Okay, but the point is, these are, and Vanguard. I don't know if you have heard. Look up. This was his name, John Bogle. Let me put it. If you want to read about critique of the mutual fund industry, look up this guy. His name is John. He's very old now. He started Vanguard. Very critical. If you want to learn about the mutual fund industry from a very critical perspective, look up his readings, John Bogle. So he started Vanguard. This guy's very conservative, very traditional. Who started index funds? Vanguard. I don't know if you ever lived in the US. This would be you know what Walmart is? Walmart? Yeah, well, retail, very cheap retail. See, that would be the Walmart of the retail industry. And that would be the Walmart of the mutual fund industry. Very low cost, value products. Vanguard. So very traditional. Something so traditional to accept this robo-advisor, there must be some value in it. I heard about this from one of my students 2 years ago. I was a professor at the time. I was fairly skeptical. Because, I guess financial advising and planning is almost like health care. You really need to know your patient very well. Okay? You need to know your client, your customer's financial condition. Okay? Very well, so that you are able to provide that financial advice on a regular basis. Okay? And the last conclusions, it's just, when you make investment decisions, you think about the totality of your situation. What does totality mean?
Again?
Everything.
Totality. Everything. What does everything mean? When you make investments,
Age, objective.
your age,
Your wealth.
Objective.
how long you plan to invest,
The fees.
the fees, okay.
Constraints.
Risk tolerance.
This is details, okay, but your own situation.
Risk tolerance.
The wealth, I said the wealth, the inheritance. How about married or not?
Yes, of course.
Does your spouse interfere in your finances? You know they do, right?
Yeah.
My wife wants the money and that's it, okay? No. Your children, do they want your money?
Yeah.
Do they count in your investment decisions? Of course they do. Right? Your inheritance. Do you have any, well, here's different. Do you have pension plans or retirement plan? Yeah? If you have a retirement plan, if you're covered by a retirement plan, that should be factored into your investment decisions. All right? How about your position in a company? Does that matter? If I work for NBAD and you're managing my money, what should you not do for me? Again, if I was some senior executive making a lot of money at NBAD, and I come to you and say, please manage my money, here's my 10 million dirhams. What should you not do for me? Invest where? You should not invest in any banking stocks, right? Or banking funds, a banking sector fund, right? Or financial services sector fund. Why not? Very good, because I'm already exposed to banks. So if I lose my job, I probably lose my job at a time when the banks are not doing well. So banks are not doing well, I lose my job, my investments are doing poorly. That's very bad advice. Right? Okay. Long term, obviously, we said that. Okay. Use low cost funds. Okay. And I said, do not use the mutual funds to time the market. Remember, market timing meaning, like I've said before, I think the market has bottomed out. I think it's going to recover. So these tactical short-term moves, they don't do you good. There's a lot of evidence that shows that at least mutual funds do not do well in terms of timing the market. And lastly, whom should you send a thank you note to, besides Hamad?
To the market.
No, not to the market. Who should you send the thank you note to? No, you forgot. He's a good man. My friend Al-Khawarizmi. Or make dua or something, you know. All right. Well, thank you very much. It's been a pleasure. If you have any questions, my email was on the first slide or second slide.